Boom. Come on. You know I'm going to ask it again, Naeem. Naeem. Who do you think you're fucking dealing with? Huh? I bet you think it's Joey Bananas, don't you? It's not Joey Bananas. It's the ultimate market professional. The man that's coming with the juice, the alpha, the insight that you never heard of before. Right? Gentlemen, it's Monday and we're back. Okay, we're going to have a fantastic week this week. Anything that's going wrong right now, just understand that too shall pass. Good times are coming. Great things are coming if you continue to work and you continue to be consistent. Those who are always consistent and always go to work will never miss a lucky day. They'll never miss an opportunity because they're working every single day. It does not matter how bad things get, whether it's in your personal life, the markets, your business, your job. Continue to be consistent. Continue to push forward. This too shall pass. The good times are coming. But if you do not prepare during the bad times, when the good times eventually do come, you're going to miss it. You're not going to be prepared. You're going to miss the opportunity. That's the difference between winners and losers. Everybody's going to get the good times. Everybody's going to get the opportunity. The question is whether or not you're going to be prepared to take advantage of that opportunity. I will show up every single day regardless of how I feel, regardless of what's happening in the markets, regardless of what's happening in my personal life. And that's why when the opportunity comes, I'll be prepared. I'll be ready. I'll be positioned for it. I'll get the bulk of the move. I'll get the bulk of the gains because I'm not waiting for markets to pump before I decide to ape into something. That's the difference. We're prepared. We're looking ahead. All right, gentlemen, let's fucking go. Let's have a fantastic week. Let's take a look at these markets. Okay, so here's what we're going to start with. So we're having a good conversation inside of the Discord. If you guys are not already a part of the Taylor's Code, the private Discord, I don't know what else to tell you. But inside is where we got the alpha. So I'm talking to some of the gentlemen over the weekend and explaining what's happening right now with the U.S. dollar and what Trump's trying to do with these tariffs and how they're trying to reverse these trade deficits that we've created with all these nations and why it's important, why it's so important. Why are people talking about the nation going bankrupt and how we're going to fix that? Well, let's talk about that. And then we're going to tie this into the bigger picture in terms of what's happening with markets right now, what our bigger picture goal is in terms of our investments. Because there's got to be a goal. There's got to be a reason we're investing into things, right? There's a reason we're putting fiat into things like crypto, into things like gold, into equities, etc. There's a reason that we're doing that. So you got to have the bigger picture goal in terms of why we're doing that right now, and then when are we going to take profit? When are we going to rotate? What's the plan, right? There's got to be a plan. There's got to be something that we got to do, right? This is why I'm always 10 years ahead. I'm thinking 10 years down the road. I'm not thinking about next week or next month or next year. This is why the local price action in markets doesn't upset me, doesn't make me cry at night. The markets are down. Eggs are $4 a fucking carton. I don't know what to do. No, it doesn't happen to me because I'm thinking 10 years down the road. I don't care about what's happening right now, right? So what is happening 10 years down the road? Well, the U.S. dollar as the world reserve currency is under attack. It is under duress. Okay, now why is it under duress? Let's take a look at a chart. I'm going to show you guys something. So we're talking about this in the Discord and just doing some analysis on it over the weekend. So let me do a little Mr. Producer. We got all them hoes. Mr. Producer. All right, so let me do a little fucking transition here. A bomba clots. All right, gentlemen. Can you see this? Yeah, you should be able to see it. All right. Let's take a look at this. So we were looking at this inside of the Discord over the weekend. I want to touch upon it, explain how the U.S. Treasury and the U.S. government is funded, okay? This is very important for macro, and then we're going to get into charts. So 1, 2, 3, 4, 5 nations before the United States have held world reserve currency status. What does that mean? That currency is used globally for trade, to preserve wealth, to hold their, basically hold their money in. This is the world reserve currency. So first, it was the Portuguese Empire. Okay, this is also why Portugal, Spain, the Netherlands, the Dutch, the French, Great Britain, they had all these colonies across the world. They were big empires. They were doing tons of trade. They were getting rich off of the resources from these other nations, and that's why they got this world reserve currency. So we got to take a look at how these things happen, right? So Portugal maintained that world reserve currency for 80 years. Okay, that was their reign. After they tailed off, that empire started to crumble. It went to Spain. Okay, so they had their build-up period. Then Spain was the world reserve currency for 110 years, from 1530 to 1640. Okay. Next, it was the Dutch. Okay, the Dutch had it for 80 years, from 1640 until 1720. Then we get the French. Okay, France had it for 95 years. They were the world reserve currency, 1720 to 1815. Then Great Britain, which was the most recent empire before the U.S. So they held it for 105 years, 1815 to 1920. Okay, now let's pay attention to this last transition into us. So the British East India Company started to decline. World War I happened, and then the Great Depression took place, and then World War II. That's what caused the decline of Great Britain. But whenever Great Britain was at its peak, the East India Trading Company was the biggest trade company in the world. And the U.S. or the British Empire had influence all across the globe. Okay, so they had that power. Now, what took them out of the power? The lack of industrialization. Their economy declined, and so they lost supremacy in the financial world. Okay, well, they held it for 105 years. So let's take a look at the U.S. now. So the U.S. becomes dominant after World War II. Clearly, they became the world reserve currency in 1920, but after World War II, it was very clear the U.S. empire was the dominant in the world, the dominant empire. 110 years of world reserve status would take us to 2030. That would match the longest any nation has had world reserve currency status with Spain. So even if we just match the longest in history so far, we're only going out to 2030 as the world reserve currency. So we're coming towards the end of our reign if we don't do something different here, okay? This is really important because 10, 15 years from now, we need to know where things are going to be at and why we're making decisions for today and how they're going to affect us from 10 years from now. Well, what's going on with the U.S. right now? We've deindustrialized. We've sent all of our industrial capability, all of our manufacturing capability overseas. We've outsourced it for cheaper labor, cheaper prices. We've given it to countries like China. Okay. So what does that do to us? Well, because we have the world reserve currency, we can do that temporarily. Okay. And why can the U.S. get away with running these massive trade deficits with countries like China, who basically export all of their goods to the U.S. and we pay massive fees in order to do that, right? We pay them tons of money to import. So what does the U.S. do? Because we're the world reserve currency, we don't need to send countries like China gold bars or assets in order to pay for our imports. The U.S. can pay for trade and do trade in U.S. dollars, right? It's the world reserve currency, so nations across the world use U.S. dollars to transact with each other. So there's value in that U.S. dollar. Why is there value there? Because the dollar's stable. The dollar is backed by our military, basically is what it's backed by, okay? So countries are comfortable in accepting U.S. dollars as a form of payment. Is China going to accept Venezuelan bolivars as payment? No, because it's a hyperinflated currency. Are they going to accept Argentinian dollars? No, because it's a hyperinflated currency. Countries aren't going to trade in currency that's weak, that depreciates incredibly quickly. This is why the U.S. dollar is the world reserve currency. They're going to transact in U.S. dollars because they know the country's stable, the economy's stable, the dollar will retain its value more than other currencies. That's the only reason we can use it. So China is willing to accept the U.S. dollar. Well, now that they have hundreds of billions of U.S. dollars that they're making every single year from doing trade, trillions at this point actually, now that they're getting all these U.S. dollars, China is just like any other investor. They have a shit ton of cash that they know is going to depreciate over time. So are they just going to hold that cash, or are they going to do something with it to try to preserve that wealth? Well, they're going to preserve their wealth. So there's two things that they can do. One, they could either sell those U.S. dollars and go buy a bunch of gold and hold their wealth in gold and get rid of their U.S. dollars, or to the benefit of the U.S. temporarily, they could buy T-bills or treasury bonds, basically sell their U.S. dollars back to the U.S. government in exchange for debt, in which they're going to earn an interest off of, a yield off of, and they're going to get their yield in US dollars. Okay. So here's the issue with where the US is going right now. If the US loses its world reserve currency status, number one, less people are going to take US dollars for payment, which means we have to do what? Well, we have to give them gold. We have to give them something else. Well, if we don't have gold, if we don't have other assets, country goes bankrupt. We have no money. Or if a country like China decides, you know what, this US dollar, it's not as good as we thought it was. We don't like the US dollar. We're getting paid in interest in US dollars on our bonds, but the interest we're getting paid, which is USD, if that currency continues to inflate and get hyperinflated over the next 10, 15, 20 years, whatever the length of that bond is, the value of their interest or their yield also goes down. So if they no longer see the value in purchasing US debt and purchasing US dollars and getting paid interest in US dollars, they're going to stop buying those treasury bonds. And they're going to put their USD in what? Like I said, gold. Well, who are the biggest importers of gold in the world right now, ever since the 2008 financial crisis? BRICS, right? BRICS. Brazil, Russia, India, China, South Africa. They're all importing shit tons of gold. Why? Hedging against the fall of the US dollar as the reserve currency. So if China and these countries stop buying treasury bonds because they don't want to hold USD anymore, the US government is now no longer funded. We go bankrupt. World reserve currency status gone. Okay? So we either go bankrupt through treasury bills, treasury bonds, not getting purchased anymore because nobody wants a US debt, or nations start requiring forms of payment that are no longer USD. So they were going to require gold, silver, Bitcoin even is a thing that Russia is using right now with China, right? So these nations are going to start to move away from the USD. This is also why sanctions, Ponky, my man, I'll get to that. This is also why sanctions on Russia that the last administration had imposed were counterproductive, because these nations aren't just going to allow their economies to collapse because they can't trade in USD anymore. No, they're going to use other means, gold, or they were using crypto. Russia came out that Russia was using crypto to make payments to China and these other nations to be able to trade. So as more and more nations move away from the US dollar, that hurts America, okay? So we got to think, how much longer do we think we're going to be the world reserve currency? We have to plan for that. We have to think ahead and say, okay, if we lose that world reserve, right? Exactly. It pushed Russia closer to China. Exactly. We made allies out of people we didn't want to make allies out of. So if we lose that world reserve currency status, we need to understand, well, how do we hedge against that? What do we hold instead of USD in order to capture an appreciation of an asset that we move to, which is going to be gold and Bitcoin. Those are going to be the new world reserve currencies. It's going to be gold. It's going to be Bitcoin. Bitcoin is literally digital gold. That's all it is. It's just digital gold. Same shit. But with more of a capped supply. Only 21 million Bitcoin. You can continue to mine gold. So that's where we're at in our cycle as a world reserve currency. We're coming to the tail end of it, right? It's within our lifetimes, likely, if they're not major reforms. So I'm going through all this to make you understand that I'm thinking 10, 15 years down the road, whenever we make these investments, whenever we do these things inside of the Taylor's Code, I'm not thinking about tomorrow or a week from now or a month from now and just hoping to make all this money trading shitcoins. No, I'm thinking, okay, how do we outperform Bitcoin and gold in the short term? During bear markets, we rotate back into major assets. So we rotate back into Bitcoin and gold. And we take all the profits that we made off of altcoins, these beta plays, and we rotate them back into the majors so that we have more capital to own more majors, right? So you outperform Bitcoin during bull runs and altcoins. You take all that extra profit. We go into a bear market. We buy Bitcoin at the lows with more capital. You have more Bitcoin now. This is the game. So this is the cycle we're playing. And the reason we want to hold gold and Bitcoin and silver and these things in the long term is because as we transition away from the US dollar as a world reserve currency, we have assets that are going to appreciate with that event taking place. Now you understand why we're thinking this way. Okay. So now that you understand the psychology of how we're investing and why we're investing the way we're investing, now we can take a look at charts. All right. So let me know when you guys can see this. We're going to take a look at Ponky. So one of the gentlemen watched one of our videos last week and he asked for Ponky. So we'll take a look at Ponky. I used to hold Ponky and I traded that. So I'm interested to take a look at that again as well. Okay. Hold on. I got to make sure that it didn't switch, did it? No, it didn't. All right, hold on. There we go. All right, now we're good. All right, gentlemen, let's take a look. All right, first things first. Let's take a look at Bitcoin. Bitcoin, we drew this trend line. Hilarious how they play. So we drew it whenever it was basically right over here. And it's effectively played out. So we're still building up. So this is nice because on a higher time frame as well, Bitcoin is reversing trend, which is good. So on Bitcoin, to get confirmation of bullishness and to move back to the upside is reclaim this range. We reclaim, what is this, 80? Nope. Let's see. We have the price label on there now. We reclaim this range low, about 89.2. We get back up above this range low, we're confirmed bullish again on Bitcoin. Okay, so we got this little uptrend playing out. We took this liquidity. This is likely the low on Bitcoin as long as we see this next move happening to the upside. This is likely the low on Bitcoin right here. Okay, so we took this liquidity, boom, pop back up, and now we're in a structured uptrend. Okay, this is the first trend reversal we've seen in this entire range. So this is clearly coming back up. Okay, all right. So not much to talk about on Bitcoin. We know what we need to do. We need to get above 89,000. Okay. ETH. I mean, just moving how Bitcoin's moving. We talked about this. ETH, this might not necessarily be the low at 17.6. There could potentially still be a puke down lower like we talked about with the RSI. It's still not as bottomed as I would like it to be. You know, something like here, oversold, very oversold. This is the lowest it's come down on the weekly since July or June of 22. But I mean, I still would like a stab lower to the end of this margin. So we'll see if that's the low on ETH. But like I said, the pico low, if we ever got it, would be this 1620 where this naked point of control is. That's your ultimate generational bid. You shove down here, you make fuck ton of money. Okay, so 1620 on Ethereum. This is your naked point of control from bear market low to quite literally where we're at today. All right, we can even move it over now. Yeah. Okay, that's ETH. Now quickly, we want to take a look at SPX as well. All right. So on SPX, I was saying this inside of the Discord this morning. Get this out of here. This is looking good. I like this. Okay. So if you look at the monthly time frame, when you get these massive wicks, this is bullish if this closes up in here at the end of the month. So if we can get this to close, this monthly candle to close up within this supply or up above even the supply, which would be massive, that's incredibly bullish. Why? Well, if you get these massive wicks down, okay, so this is a monthly candle right here. So that means whenever the month opened, this is where the month opened. Okay. So the bottom of this body is where the month opened at. Okay. So that means from the time the monthly open took place to this bottom, we came down 7.56% on the SPX. And even being down 7.56% from the monthly open, by the end of that same month, we managed to close at 56.4, and this was at 5,100. So we managed to close 10% higher from the pico low of that month. Think about that. In the same month, we made a 7.56% move to the downside and then ended up closing that same month up 10% from that low. Okay? That's huge. And then what happened after that? Boom, big green candle, Little pause here at the supply. Boom. Big green candle again. Pumped. Retest supply. Pump again. So we were trying to test this breakout range right up here at 6,000, 6,100. And then we rejected. We came back down to supply. Or came back down below and retested this demand. Now we're close to supply. So what's my point with this? These massive wicks on these monthly candles are bullish, because that means that price came all the way down here in March. So down to 5,500. Retested this major demand zone, and price snapped right back up into our supply region. That's huge. So that means that there's massive demand here, but there's also a lot of supply here. So if we can chew through this supply by the end of the month and close like up in here, then we're pumping up again. We're going to new all-time highs. Okay. So that's very bullish. So we want to make sure that we finish this month up in the supply region. So we got about 7 days, 6 days. Okay. So we like that. That's a bullish structure we're building on the monthly. Okay. So we're good there. Let's get rid of these. Okay. That's our previous all-time high, or all-time high break. Okay. If we look at it on the weekly, you see how it's painting out. So yeah, look, see, we're right up in here, coming back into our supply zone. So we just want to make sure that we can chew through this supply and flip this into demand. If we can flip this into demand, we're looking fucking fantastic. Okay. So we came back in this demand, boom, bounced right up off of it. We're coming right back up into our supply, retesting our supply. We got to see if we're going to reject or push through. Okay. So now let's take a look at DXY. Just get a quick little update on this. Look at that. Who could have foreseen? I mean, look. Can't make this shit up. Our levels are playing exactly as we drew them out. So I had these levels drawn out while DXY was up in here. Okay. For those of you who've been showing up, but look at this. We called it perfectly. I said this is the next demand zone. We come, we nuke, we lose this demand, we turn it into supply. We get a fat nuke, come into this demand, and look at this. Perfectly trading within this demand. Okay. So now we want to see another puke down into here. This will be incredibly bullish, but that's playing out perfectly. And then let's take a look at 10-year. Okay, same thing. We called the demand, came right back into our demand. It's ranging right above it. Now we want to see this start to roll over and come back down into this demand zone. Okay. This is shoulder, head, shoulder. Head and shoulders, right? So you get a shoulder, come back down, retest your demand. You get a head, so this is your top. This is a topping pattern, okay? For those of you looking for tops and you want to sell. So you get your shoulder, you get your head that comes all the way back down to retest this demand zone again. And then you get your second shoulder, which is a nice little move back up. This is a complacency shoulder. And then you want to look to sell here on this complacency shoulder before it rolls over back down into here. Okay, so that's a head and shoulders. We're building that beautifully on the 10-year. Okay, all bullish. So now let's take a look at Ponky, huh? You want to look at some memes? So let's look at Ponky. So keep in mind, right? Something like Ponky trades on Solana. Okay, so we can do, they do have a perpetual contract on here. Let's see if they have. I want to see if they have a Ponky on Radium. Yep, here it is. So this would be the full chart. Should be. January 24. Yeah, it looks right. This is in log. Okay. So, Ponky. A couple of things with Ponky. So I used to hold this. I used to trade this. Content's good. They got good content. They're one of the biggest accounts on Instagram, on X, etc. with their contents, which is good. The only problem with Solana memes, which is why I don't hold them in the long term, is that they're just so mindshare and hype based driven that as soon as the hype and the mindshare is gone from an asset like this, it's pretty fucked, okay? At least with something like the Boys Club, where Pepe, Brett, Andy, and Wolf are things that we're holding cycle long, those are attached to an alpha and they're beta to that alpha. So if Ethereum moves and Ethereum performs well, those beta, we know for a fact with data, with the charts and how they trade, those are going to pump too. Something like Ponky, something like Gotsus, something like Trump, like these coins will still get pumps, they'll still move. The issue is that if they don't have mind share on Solana, they're not going to get attention, they're not going to get bids, they're not going to pump to new all-time highs. That's just the reality of the asset and how it works. Now, if we take a look at Ponky though, is it worth bidding? Is it something that we could look at and say, well, it's in a good buy zone, it's in a good buy territory? I would say yes, right? Because if you did want to swing this, oops. I mean, yeah, you would effectively be doing this. Like this would be, whoops, what the fuck is that? This would be your bidding area for Ponky. Okay, which is good. So it did come back down into here. Why is this demand? Well, if you pull this over, clearly this is where price was bouncing from. So it rejected here, came up, came back into here, and then kind of came back up, tested, and then before it went higher. So we completely lost this demand zone, which this would have been the first one to hold, right? Did not hold, and you see why price is rejecting here. So you see how it's rejecting right over here. And then this would be the bottom. So this is supply. Okay. So if I was going to bid Ponky, I would be looking to bid down in here. Okay. On a retest of this demand. If you didn't get this wick or get in down here, I would not be buying up in here, okay? Because this looks like it's rejecting off of supply again, right? Came up and now it's starting to reject. I would only buy something like Ponky at an absolute extreme discount, okay? Here's why. This is not going to start pumping again until you get Solana and majors to start ripping face, okay? So that's going to be the only thing that really causes a breakout on this. So I'm looking to get in over here, right? A little bit more accumulation. And then if you get Solana and these majors to start ripping again, I would be looking to see if we get a rejection off of the supply, or do you eat through the supply and come back down and retest? And I would be trying to exit up over here. Okay. Do I see Ponky going to new all-time highs? Personally, no. So this was in July of 24. It's just, I don't see that happening. I just don't. Because with how many memes come out on Solana and what's going to be new that comes out on this next leg up, I don't really see the potential for people coming back to Ponky and saying, all right, let's send this thing to new all-time highs. Unless we just get an absolutely outrageous bull run, everything's pumping to $1 billion, $2 billion market cap, and then you just get Ponky naturally to go to new all-time highs. That would be the only scenario. But in and of itself, just from the meme itself performing well, people coming to the meme for it, the content in and of itself, I don't see it going to new all-time highs. That's my personal opinion, okay? So what I would be looking to do is I would wait to get it to an actual low, okay? Back where I was just telling you to get it, right? And then I would be looking to jeet up in here. Like in this area. Okay. So you see how this was where it bottomed in the past and kind of pop up, come back down, reaccumulate right here, and then came back down in this area. And then as soon as it came back down into the supply, it kind of all the way down, right? So I would be looking to jeet up in here, So, I mean, it's risk reward. I mean, it's up to you. So I would try to get it down here. So you're close to a 3x, right? So you could crack off a 3x on something like this. Again, to me personally, do I see that as being worth it? No, because I know I can capture a 3x on something even like Pepe, right? Pepe can capture a 3x from here easily. So is it worth it buying something like Ponky where you know the mind share is not necessarily there anymore, as compared to Pepe where everybody knows Pepe, it's a winner this cycle, normies know about Pepe, etc. If you can capture the 3x on Pepe, I would just capture the 3x on Pepe. You see what I'm saying? So it's all about RR. Like, what's your risk to reward? So my if you were actually playing it like a stop, an actual trade, I'd put my stop loss like right there. So I would, look to get in here. Have your stop loss like in there, and then sell there. All right, that would be the way I set up that position. All right, so I would enter down here. If you come down in here, get your stop loss, and then if you don't and you come back up, I would be selling up in here. Right. Again, personally, I just don't see the reason to bid it though. Like I just know that there's softer tosses to a 3x to a 4x than Ponky, right? So again, it's up to you. Now, if you believe in the project and you see something that I don't see, then by all means, buy it. But like I said, I would not buy it up in here. I would try to wait for a retest of this demand back down in here, try to come and fill this wick a little bit before I actually enter. I would enter and down in here. Okay? So there's your Ponky. All right, gentlemen. Any other things you want to look at? Chart requests, assets, meme coins, etc. If we're good there, I want to show you guys what we're looking at with silver as well. Okay? Gold and silver. So let's take a look at gold and silver. So we were just talking about how the US dollar is the world reserve currency right now. So if we lose reserve currency status, what's the hedge against that? It's gold. Okay? And that's why gold has actually been ripping face since this ranging period from March of 22. We've been ranging since actually been ranging since COVID. So gold had been ranging since COVID. Now notice something, right? Why would gold pump during COVID? So everything else is nuking during COVID, right? So it did actually nuke a little bit, but not as hard as other assets, right? So COVID happens, everything nukes, but there's a quick move back up on gold, way quicker than other assets, right? The low was right about here, okay, March 19th. Why is that? Because gold is the hedge against the system. The only thing that always has retained its value from the entirety of human time, from the Stone Ages, is gold. Gold has always had value. Gold will always have value. It's the easiest thing to store without it going bad. People don't use it, so the stock to flow is very good. So it's a great asset to preserve wealth. Well, ever since COVID, we've been ranging. We pumped up, and then we've been ranging in this area right here. So we drew the fibs on here. So the hedge against the system as it's currently built is gold. Because if the system, the financial system as currently constructed, collapses, everybody's going to move towards gold. The price of gold pumps. So look what has been happening since February 24. Okay? Gold finally breaks out of this range. So here's our range, 0.51. So our range was from $1,600 up to $2,000. Okay, this is our range on gold. This is where you want to accumulate. We get our first breakout, and we come and we tag this 1.618 on our fibs perfectly. Look, hits the 1.618, brief reaccumulation, brief pause, then it does what? Moves right back up, almost tags, so it front runs our 2.618 just barely, pauses for a moment, comes back up, reclaims it. So we come back, reclaim it, retest it, now we're moving back up. So we're above our 2.618. So gold has been breaking out since February 2024 for so over a year now. Why is this important? Because what I was just talking about with the world reserve currency status, more and more nations and people are starting to hedge with gold. Okay. This doesn't mean something's going to happen this year. It doesn't mean something's going to happen next year or even the year after that. But people are starting to move towards that direction. And it's clear because gold is breaking out. Gold breaking out says people aren't super convinced on the current financial system. Okay. It's a hedge against the system. Understand that. So as we move up, we're probably going to tag this 3.618, which is going to be a $3,200, $3,300 an ounce per gold. Okay. And then our 4.2 is at 3,500. So I see this getting tagged for sure. So that's going to be another 8%. So not a huge move, but it'll go up there. Okay. So we'll likely get up in here, start to reaccumulate and see what happens with that. If it comes back down to this level, maybe back down to this level, we'll see during the bear market. Okay. So gold's breaking out. Now, if you haven't been accumulating gold, that's not necessarily the play you want to make right now. You don't want to be buying gold. But let's take a look at silver. As gold starts to top out, what happens with silver? Well, silver will then catch a bid. Okay? So let's take a look at silver. So we got the fibs drawn out on silver. Previous all-time high. This was whenever the Lehman Brothers were cornering the silver market. So they pumped the price way up in here. Last all-time high for gold or for silver was April 25th, 2011. Okay. Look how it tagged our 2.618, just like gold is right now, perfectly. Perfect tag on that. You top and you come back down and you start ranging again. Okay. So you range for 10 plus years. You're ranging. Finally, we get our first breakout of the range. Okay. So gold's been performing. So now people will start to rotate out of gold into silver. So we get this first little breakout. We come back, we retest, and now we're moving back up. Surely we'll get this 1.618. Just a move back to all-time highs from 2011, 2.618. You got another 50% move on silver. Do I think it stops there? Not necessarily. Cycle top on these commodities, you probably get the 3.618, just like gold. Okay. So that's going to be not a 50% move. That would be a 2x, almost a 2x. Okay. From current prices. So I'm saying this because these commodities, these precious metals are going to see their own bull run here in the coming years. So as equity markets top, as crypto tops, as we enter our next bear market in these assets, you're going to see this huge rotation these coming years into gold, into silver, into precious metals. It's going to happen. So why am I saying this? So right now, while we're playing these beta, we're playing these lower cap stocks, lower cap, cryptocurrencies, etc. We're hitting these huge gains on these assets. It's to accumulate large amounts of money, basically wealth, so that as this cycle tops out and we go into a bear market and we go into a recession that's eventually coming, and everything's getting decimated, everything's nuking, prices are going down. We've already sold, we've gotten out of markets, and we're holding USD or we're holding asset or we're using fiat. We're going to rotate. You want to rotate back into precious metals, back into things like Bitcoin, because those will preserve their value better in a bear market than low caps, right? The same way you get more moves to the upside or higher move to the upside, the same way you're going to get a bigger move to the downside on those assets. So you rotate out of them at the top, and then you let the bear market come. You start bottom out in bear markets and the recession, and then you rotate back into gold, into silver, into Bitcoin, because you're going to see these assets, mark my words, in the coming years, rip face. You're going to see Bitcoin go to $1 million plus. You're going to see gold go above, what's gold at right now? $3,000. So you'll see gold go up to 3,500, right? And within 10 years, it'll be above 5,000, I bet you, right? Because people are going to continue to hedge and rotate into these precious metals because they're going to preserve wealth a lot better than the things denominated in USD. Okay, so I'm giving you the 10-year, the 15-year plan, the vision long term in terms of how you're going to preserve your capital and preserve your wealth. That's the hardest part about this. The hard part is not buying the assets. The hard part is not knowing what to buy. The hard part is knowing when to buy them and when to sell them. And even more difficult is after you've sold them, what are you going to rotate them into so you don't lose the wealth that you've accumulated? Because even though you might sell the asset for large profits, what are you going to hold it in? Because if whatever you hold it in just ends up depreciating as well, then you lose all the gains that you've realized on the first asset. So that's what's even more difficult now is if you did make money, if you did sell at the right time and you got all this profit, where do you put that capital? Where do you put it so you can preserve your wealth? This is what people don't talk about. They don't talk about this part. This is what we're going to do in the Taylor's Code inside the Discord. This is what I'm going to show everybody how to do. Is where are we going to put it now? Are we going to put it in gold? Are we going to put it into silver? Are we going to put it into Bitcoin? Like, where can we continue to appreciate our wealth once we've gotten out of this bull market and sold all of our risk assets and we got to put them into something safer? That's the goal. That's the trick down the road. That's how we preserve wealth. This is a 10, 15, 20, 30-year game we're playing, okay? So, it's not about just making money this year or next year. Don't be short-sighted. Understand where the markets are heading. So gold is an indicator showing you that the current financial system as it's constructed is moving towards not a full collapse in the sense that the economy and the world is going to fall apart. No, the financial system as currently constructed is going to collapse, being that the US dollar is going to be the world reserve currency no longer. That's what the signal in gold is. That's your signal there. When gold pumps, when was the last time gold pumped? 2008 financial crisis. You have the 2008 financial crisis in the US and the United States. What happened to gold right after? It was already starting to move up. You have the financial crisis. Boom, gold rips face. Okay, why does gold rip face? It's a hedge against the system. If the US dollar collapses, the US economy collapses, you want to hold gold. COVID happens, right? COVID happens. Gold pumps, right? 2008 financial crisis, gold pumps. COVID happens, gold pumps. Ranging, now you're seeing gold pump again. Why is gold pumping again? I told you why. Okay, so gold's at new all-time highs. That's signal. Okay, the S&P is not at new all-time highs right now. The S&P is 10% pulled back. Crypto is not at all-time highs right now. Crypto's heavily pulled back. Risk assets, risk markets right now are pulled back. Why is gold at all-time highs whenever these assets are pulled back? Because gold is not correlated to them. Gold is a hedge against that system. So if that system isn't performing well, gold pumps. Make sense? So I'm showing you this is signal in terms of where the world is heading down the road. Okay? All right, gentlemen. So we got gold. And then silver. Yeah, my point with silver was if you want to get in on precious metals, this is what I would be accumulating. I would definitely be grabbing gold. You could literally get gold billions online. You can order them. You can get these ounce gold bars. You can also get the silver bars as well. I would be buying these, getting them sent to your home. Okay, or you can buy them on paper, but I would rather hold it as opposed to just hold it with the piece of paper. I would be accumulating silver because on silver you got more outsiders returns at this point. Okay. All right, good. All right, so we're good on Bitcoin. We've got ETH. Let's take a look at some boys club. So you see on these green days, this is the point I was making about Pepe against Ponky, right? You could buy Ponky, but for Pepe, just from here, what would 3x be? So to get the same return on Pepe as you would on Ponky would be back up to this high, right? I'm more confident that Pepe gets back up to this high as opposed to Ponky getting back up to that level, right? Just because the mind share, the attention on Pepe is there. Elon's going to tweet about it. It's on all the major exchanges, right? Like that's just what it's going to be. So I would rather be accumulating this asset down here as opposed to hoping that Ponky gets a pump. Again, that's just my opinion, okay? So that's where we're at on Pepe. Let's put it against ETH. Bumbleclad. All right. So we're getting these tiny moves on ETH. Again, this is why we make this play. It's basically the same chart, just levered. Okay, so from the Pico low, we're up about 19%. Look, 50%. So from the Pico low on ETH, we're up 19%. Pepe's up 50%. So if you were accumulating at the lows and getting large positions here, look, you're up 50%. This is my point. So if we think ETH is going to go anywhere near 4,000 again, or what would make more sense, it's not, oh yeah, because the chart's not that old for Pepe, or if it even just gets back to previous cycle all-time highs, which is 5,000, Pepe's going to rip fucking face. So let's look at it with, let's look. Andy. Where's Andy? Not, let's see. Andy, I want to see it on, here it is, Uniswap and USD. Yep. Okay, look at this. Okay, from the Pico low on Andy, all right, where are we at right now? Let's see if it's more levered than, yes it is, see? So Andy from the Pico low. So ETH up 19%, Pepe up 51%, Andy up 60%, okay? The beta play is still playing, okay? So it's up 60% just from the lows. If ETH pulls a 2x from here and just goes back to 4,000, let's say, and we just knock our heads off of 4K again and we come back down, cycle's over, even if you just play that move on ETH back to 4,000, Pepe, Andy, Wolf, rip face. So let's put Wolf on here too. They're still doing what they're supposed to be doing, right? So if we do Land Wolf, where we at 0x67, yeah, that's the one. Give me the one on Uniswap. Here it is. Okay. Look at how levered Wolf is. Okay. Let's pull this up. So from the Pico low on Wolf, we're up 54. From this high, we were up 63, but we'll call it right here. 55%. So yeah, they're moving in conjunction, okay? So you see how this works. ETH up 19%, 51%, 61%, 55%. Okay, beautiful. Beta train still playing. So here's what we're doing. We're saying, okay, well, if that's the beta train playing out as expected, okay, where do we think ETH goes from here? Well, if ETH just goes back to this cycle, all-time highs, you're looking at another 2x. If ETH does a 2x, Pepe will do 6x. If ETH does a 2x, Andy will do 12x. Wolf will do 15x from these levels, right? This is when you want to accumulate. If ETH goes back up to previous all-time highs, which in my opinion it will at the very least this cycle, I don't see any reason ETH doesn't get to 6,000 though. So let's say 6,000. So we get up to 6K. That's almost a 3x. So if ETH does a 3x from its current prices, Pepe does what? That would be a 9x. So Pepe would do 9x. Andy and Wolf would be closer to 20x from the current prices, right? 20x is not a joke. That's $1,000 into $20,000. That's 10 grand into 200 grand, right? That's a big deal. Those are the types of moves you're going to see on the Boys Club this cycle, because ETH, this chart is not done, okay? Because as a reminder, what's ETH? It's IWM. So let's do IWM, new pane. It's just this chart, okay? IWM is shitco's, small cap stocks, okay? This is the first time that IWM has not broken to new all-time highs during the retest of the previous all-time high. So the last time IWM went to all-time highs was right there, okay? Look at where ETH was. Literally perfect confluence. IWM at all-time highs, ETH at all-time highs. IWM breaks out over here. So tops out over here, pumping. So ETH is doing what? Pumping, right? So ETH tops right here. This is why IWM's right here, okay? IWM nukes right here. ETH came back down. Boom, we start pumping into this high. Okay, good. Cycle's over. We come back down. We nuke. We come into a bear market. Same thing with IWM. Reaccumulation down here in a bear market. This is the first time that IWM's come back up, retested previous cycle all-time highs. And what did it do here? Call the top perfectly on ETH, okay? So IWM still has not broken out to new all-time highs. The confidence that this gives me is that on this move back up, like we've been talking about, that break to new all-time highs is going to send ETH where? To new all-time highs, okay? If you don't think we're going into a recession, if you don't think we're going into a bear market, this is what's going to play out on ETH, okay? IWM will start to push back up, break new all-time highs as the S&P does. S&P goes to new all-time highs this time. So does IWM. So does Ethereum. So does all of our risk assets, okay? So this is, again, what I'm trying to say is you have to have the foresight to understand what's actually going on in the market bigger picture. So that now you look at something like Pepe, Andy, and Wolf, which are so far down from their all-time highs. Instead of saying, damn, these things are so nuked. Fuck, this sucks. You got to look at this and say, oh my goodness, this is generational bid. Oh my goodness, this is generational bid. Because we're going to get a move back up to the upside. This is a fucking generational bid. Every single time we come into this demand, huge pump. Come into the demand, huge pump. Come back into the demand. What are you going to get this time? Huge pump. Huge pump. Even if it just comes back up here, you still printed. Okay? So things are still looking how I want to look. Beta train is still working. Boys Club is still going to print. If we look at ETH BTC, which is our altcoin oscillator, we've come into about as low a territory as you can come into to start bottoming out at. So ETH BTC, this shows whenever this is pumping up, Ethereum and ETH Beta are outperforming Bitcoin. If this is coming down, Bitcoin's outperforming Ethereum. Okay, so if this is coming down, it's not good for our altcoins. Now, this is the Pico low, bear market low on ETH BTC, is this little demand zone right here. Okay. This is where we probably get our reversal on ETH BTC. And so we're very close. Look, you get it just a little bit lower. Okay. Which this can come lower even if Bitcoin USD is going up and ETH USD is going up. That's fine. As long as Bitcoin USD is going up more than ETH USD, this chart still comes lower because it's underperforming Bitcoin, right? So you get this last little puke right into this demand zone, right over here, where we retested this demand over here. Then you're going to start to see something like that. You're going to get this little move back down to here, bottom out, right? Just like we did here. And see this. That's where we print. That's where we print money. That's where our altcoins go fucking berserk. That's alt season. Okay? So everything's lining up, gentlemen. We're close. Just patience, right? Time is on our side. So, I mean, we have the time for it. We're close. We just need this to bottom, pump. We need S&P to start moving back into price discovery. When that happens, you're going to see IWM go into price discovery. You're going to see Ethereum go into price discovery. You see all of our altcoins go into price discovery. That's the play right here. So we got to get this tagged. Okay. You get this tag, we're shoving. All right. Okay. All right, gentlemen. So there's you go. There's your updates. All right, that's pretty much all I had for you today. Any questions, comments, concerns? Charts you guys want to look at? I know we looked at Ponky for the one, gentleman. Anything else you guys want to look at? What's this shit? Good? All right, gentlemen. What a fucking incredible journey this has been through the downside, huh? But you're going to see. Everybody's going to come running back to the markets as things start to pump again. Everybody's going to think you got lucky. Everybody's going to think it was easy. No, they don't understand. They don't understand all the time and energy you've put into learning these markets, showing up to these streams, allocating your money to these assets whenever nobody wanted to do it. Yeah, they're going to say it's luck. They're going to say you didn't have to work for it. You didn't have to do anything for it. Yeah, sure. Now, you guys know what you're doing right now. Okay, we're going to win. We're going to win in the long term because we're going to continue to show up every single fucking day. We're going to continue to work with the same energy and intensity, regardless if we're excited, if we're not excited, if we're happy, sad, doesn't matter. Every day we show up with the same energy and intensity because then we'll never miss a lucky day. And whenever these markets do make this move back up, I'm telling you, this chart, I'm telling you, look, this chart is going to look like this. We're going to be jeeting up here, gentlemen. Lives will be changed. Okay? All right. Outside of that, let's get out of here. Oh, by the way, if you guys are wondering where Logan was at, him and AOC were at a Tesla factory in California, and they were, you know what they were doing. But yeah, so he was busy today. He was at a Tesla factory causing a disturbance. With some heat creating devices, we'll call it, allegedly, but that's what him and AOC were doing today. So hopefully whenever they're done destroying those factories, we'll be able to get them back on stream. All right, let's get out of here. Let's do a little Mr. Producer. We got all them hoes, Mr. Producer.